Hello guys, welcome back. For today's topic, I will discuss about Indonesia investment instrument. Before we go through the topic, let's discuss what is investment is. So investment is the way you put more money to generate more money. And investment instrument is it the tool like crypto, like stocks, like bonds, and other type of investment instrument which is to generate more money. So for today Indonesia investment instrument, I will discuss several investment instruments such as stocks, bank deposit, mutual funds, golds, bonds, peer-to-peer lending, and the last one is property. So why do we need investment? Investment is needed by everyone, in the present or in the future, in order to grow wealth and to beat the inflation over year. Why we need to beat the inflation over year? Because money getting smaller and smaller each year because of the inflation. So we need investment in order to grow our wealth. Before we go through the investment instrument, let's discuss about the risk of tolerance for people in investment. So what is the risk of tolerance? Risk of tolerance is the amount of loss that people is willing to prepare when making investment decision. And everyone has a different style of risk of tolerance. This is the type risk of tolerance. There are conservative, which is low risk investment style. So what is conservative? Conservative style is very low risk. It is gain a little amount of percent, which is they want the return is to be small but very low risk. So what the investment instrument? They can put the money in money market mutual funds or bank deposits. The second one is moderate, which is medium risk investment style. Moderate style is the balance between aggressive and conservative style. Maybe the combination of stocks and bond. Meanwhile, stocks is a high risk, high return investment instrument, and bonds is like medium but low risk investment. And then the third one is aggressive. Aggressive style is high risk investment style, which is aggressive style is high risk, high return investment for people who are willing to sacrifice their money in a long term. They could gain more profit in return. So most likely the people put their money in stocks or crypto because stocks and crypto is high risk investment instrument. And the first one we discuss is stocks. What is stocks? The first one is the stocks here in Indonesia is based on Indonesia Composite Index, which is IDX Composite. Stock itself represent the ownership of a company and the unit of stock itself being called as shares. Okay, let's discuss about study case of stocks. So this is the study case of stocks. This is the chart of Bank BRI, which is if you buy Bank BRI in 2009 at 400 per lot with amount of 10 million rupiah, you will get 250 lot. This is the calculation, which is 400 times 100 and times 250, you got 10 million for 250 lot. And now for investment, if you buy at 2009 and waited until 2019, which the price is in 4,000 per lot, that means your 10 million rupiah is being times 10 because 100 million rupiah excluding dividend share, which is 250 times 100 times 4,000, the price in 4,000 per lot, which is you get 100 million excluding the dividend. For information, If you buy a stocks like Bank BRI, you will get a dividend share each year. So the calculation is in 10 years you will get return 1000%. Therefore, stocks is a high risk investment instrument. Why? Because if you buy at 2009 in 4,000 per lot, and then in 2020 there are COVID case, the price is going to nearly 2,000 per lot, which is half the price that time. Okay, and then this is the magic of compounding. Magic of compounding is the increased value of investment, which is from the stock study case we can assume that when we buy at 400 per lot and sell for 4,000 per lot, it gains 1000% return. But when we buy the stock at 1,000 per lot and sell for 4,000 per lot, it only gains 400% return. Compounding is a mathematical process that can multiply your potential earnings from an investment. Compounding is mathematical process that can multiply your investment earning. The second one, we have bank deposit, which is the sum of money being kept at banking institution in order to gain interest. For information, bank deposit is a low risk investment. This is the bank deposit interest rate in Indonesia from 2010 to 2022. The bank deposit in 2010 is higher than 2022. Therefore, in 2021, the interest rate for bank deposit is 3.6658%, which if you put 10 million rupiah, it will be 10 million plus 3.6658%, which is you got 10,366,580 rupiah, which is you got the return for 366,580 rupiah. Therefore, for people who are willing to sacrifice more money, they will not put their money in bank deposit. They will put their money in stocks to the high risk investment but high return investment as well. Next, we have mutual fund. What is mutual fund? Mutual fund is money being collected in a pool from investor and being made by professional money manager that buys stocks, bonds, money instrument, and other assets. This is the type of mutual fund. The first one, we have money market funds, which is relatively low risk and give an exact of 4 to 6% interest each year, based on money market fund in Indonesia, which is money market fund for mutual fund is very high, low risk with a good return. And then we have bond fund. Bond fund is a fund that invests in bond, which is have a medium risk and differ the interest based on the bond it takes. And then the last one, we have stock fund, which is a fund that invests in stock market, who have high risk, high return based on the stock funds, may differ from profit between one and other stock fund. Why? Because stock fund A, maybe they buy the company A and B, and stock fund B, they could buy the company B and C. It will be the differ in return. And then the third one, we have gold. So gold is the most popular investment since ancient time because it is the best safe haven in tackling inflation. This is the chart of gold. So from 2002 until 2022, we can see the price is rising. So gold could be bought the real gold now and keep or right now gold is available as digital asset too, but the price is following the price market. And why is popular? The reason is, although it's volatile in short term, but the price in long term is very promising. Based on the price from 1998 to 2022, it can be seen that investment in gold is really worth it. We have bonds. So, what is bonds? So, a fixed income investment represents a loan made by investor or lender to the borrower, which could be a companies, municipalities, states, or government in funding project and operation. So the advantage of bond is, the first one, we receive income through interest payment. The second one, hold bond to maturity and get the principal back. The third one is profit if you resell bond to higher price. But there are several disadvantages of bonds. The first one is bonds pays out lower return than stocks. Of course, because stocks is a high return, high risk investment. Meanwhile, bonds is medium return with medium risk investment. And the second one is companies can default on your bonds. And then the third one, bond yields can fall. Now we can discuss about peer-to-peer lending. Peer-to-peer lending enables individuals to obtain loans directly from other individual, and usually there is app or website to connect borrower to lender. This is the difference between peer-to-peer lending and bonds. Bonds tend to have longer maturity, which is they could be around 10 years on average. P2P loans can last from couple of months to roughly 3 years, which is, if you go for P2P, it will focus on more on short-term income to generate more profit, but bonds, if you focus on long-term investment. And peer-to-peer lending return is higher than bonds, but bond is more low risk. But P2P lending risk is differ from low to high. It depends on loan type. Because peer-to-peer lending is focused on individual, but for bonds is focused on state or government. And bonds usually government or corporation, meanwhile P2P is usually individual. Okay, the last one is property. I will discuss about this because property is one of the famous investment that everyone do from the ancient time, from the old times. Why? Because property investment is a good investment. It's also a low to mid risk with high return. If the place is strategic and what type of property that being bought. This is the advantage of property investment. It could gain double, triple the investment amount if the place is strategic enough and have a good unique things that could attract buyer in the future. Also, if you buy property, you can use it as the passive income. Like you can rental the place to get more money. You can rental it to people for months, for years. It is not a wasting time to buy a property because property can gain more money. Instead of selling it, we can sell it, and also it is beat the inflation over years. That's therefore one of the popular investment. Cause Indonesia is a developed country and in the future the price is still rising. When Indonesia became not a developed country anymore, it would see the price of property will rising more further than this one. So what's the best investment instrument? So based on your risk tolerance. Everyone has its own risk tolerance, therefore all investment instruments are good. and also investment come with risk, so it's better to put your money in the investment instrument you truly understand. Thank you for listening, and that's it for the Indonesia investment instrument.